Hey, what's up, guys? Welcome back to Smart Wallet and Me, where financial wisdom matters. In today's video, I'm going to do another update on Alibaba and all the fintech companies. I'm also going to be doing an update on the 11/11 sales that Alibaba and China had just recently and what they're going to be doing also on 12/12, which is their next upcoming celebrations that they have coming in next month. So let's get right into it. So guys, as you can see, Alibaba just celebrated their 11/11 Singles Day, which was supposed to be a 24-hour period, but it lasts about 11 days. So it goes from November 1 through November 11, and they had a whopping sales of $75 billion, up from about $34 billion last year. If you look at this chart over here, you can see that there was $38.3 billion last year, and that's not even including JD.com, which is another platform of e-commerce for China. And this year they made a huge jump, almost 40% increase to $75 billion. And they have another sale coming up actually on 12/12, which is supposed to be another day where they celebrate kind of like another like Little Brothers Day or something like that. I'm not exactly sure what they call that, but this day, 11/11, was supposed to be a singles day, a celebration of all the singles. The 4 ones, 1111, is supposed to represent 4 individual people being single, I guess. And they were able to sell $75 billion worth of products on their biggest platform, Alibaba. So how does the sales of this one day compare to our United States form of Black Friday? Well, according to this article, it says Singles Day performance was higher than the 5 days from Thanksgiving through Cyber Monday, in which US shoppers spent a record of $28.49 billion online last year, according to the Adobe Analytics data. Some $7.2 billion was spent on Black Friday, while Cyber Monday generated $9.4 billion in digital sales. So that is dwarfed in comparison to this 11-day period in China, where approximately $75 billion in sales were made. That's just to give you a perspective of what and how much we're talking about in sales. In other news, I wanted to continue to follow up with what's going on with the antitrust regulations with the Chinese regulators in the banking sector in China. And they have clamped down on the fintech companies, basically coming up with antitrust laws, trying to clamp down on these big corporations because it looks like they're growing too fast, too far. And the Chinese government is not very happy about that, especially because Jack Ma made a few comments that were off the cuff and didn't sit well with some of these regulators. So now China and their Communist Party are trying to clamp down on these companies to try to bring them back down to earth, so to speak. The Chinese technology companies have lost almost $290 billion in market value over 2 days after the government launched new antitrust rules. And $100 billion in market cap was just eradicated from Alibaba alone within these last couple of days. According to this Financial Times article, the tech-heavy Chi-Next Index in Shenzhen fell 3.3%, and Shanghai's Star 50 Index dropped 3.2% on Wednesday after a top official with the China Banking and Insurance Regulatory Commission promised to look closely at fintech monopolies. The sell-off for Chinese tech stocks extended to Hong Kong, where the Hang Seng Tech Index tumbled 6.3%. And just to take a look at the Hang Seng Tech Index, you can see that the top 5 companies on there, the first one being Baba, Tencent, Meituan, Xiaomi, and Sunny Optical. They each hold a weight of approximately 8.5 to 8.1%. And these companies are taking a huge hit right now because of these antitrust regulations. Hong Kong listed shares in Alibaba dropped 9.8%, taking them 14.4% lower over the last 2 sessions and carving almost $117 billion off the company's market capitalization. Rivals Tencent and JD.com shed 11.4%. And here's a chart just to show you how much capitalization was removed from each of these companies. Alibaba was about $117 billion in capitalization. Tencent and JD shared about 11.4%. and 17.2% during the same period, respectively, while food delivery group Meituan fell 19.2%, and Xiaomi, which has surpassed Apple as the world's third largest smartphone maker, was also down 12.1% over the last 2 days. And just to give you an idea, today's range went from $261.20 to $271.92, and right now the stock after hours is trading at $267.49. It is up about $2.01 after hours. The stock right now is trading below the 50-day moving average of $290, and it's above the 200-day moving average of $238.59. The RSI strength is at 37. The money flow is also at around 30, which can indicate that this stock is currently close to being oversold. Anything below 20 is oversold, anything above 20 is overbought. And then the momentum is around negative 41, so it has a lot of negative momentum and negative news, and no doubt about it. I am temporarily very bearish on this stock currently. I've been asked that on my previous video. However, for long term, I would have to see what's going to happen as a result of all of these regulations and antitrust rules. But I'm very bullish long term on this stock. I believe that because of the market cap and because of the ability for this company to be able to sell so much products on such a large platform and to be able to bring in revenue back to back year over year growth, I think that this stock is currently undervalued, and I believe that long term this stock will take out all these lows that we're seeing right now in the long term. But again, that's all prefaced by me saying that it all depends on how China is going to clamp down on these companies and what the outcome would be. Going back to my article that I was mentioning earlier, according to this Financial Times article, it says the renewed antitrust attention on tech companies comes as the groups exert an increasingly strong influence on daily life in China, where a fifth of the country's consumer goods are now sold on Alibaba. That's 20% of the goods in China are sold on this platform alone. And China's population is close to 1.4 billion people. So that's approximately 500 million people buying on this platform alone. That's more people than the entire population of the United States. So that just shows you how large this platform is and how much they're actually producing. And I think it is with good reason that Chinese regulators are coming down, because they don't want a monopoly. They don't want this one company to be taking over the entire market without the Chinese government regulating it, because then it would become a big monopoly. Last month, Beijing released its first draft of a comprehensive law on personal data protection. The latest comments from Liang Tao, I'm sorry if I'm mispronouncing his name, vice chair of the CBIRC, added to downward pressure on the stocks this week from China's competition watchdog. And this is what Mr. Liang said: in areas where market monopoly problems exist, we should learn from international experience, strengthen our anti-monopoly examinations, and ensure that a fair market order is maintained. He said this to the attendees Wednesday at the Finance Summit in Beijing. The previous day, the State Administration for Market Regulation, China's competition watchdog, published new rules targeting behavior, including the use of exclusivity clauses to hinder competition, treating customers differently based on their spending data, and forcing them to buy bundles of products to access those they want. So they're basically forcing people to buy in bulk and in bundles based on the way they see people purchasing items, which is kind of unfair. It's not right for them to do that. Looking at the proposed guidelines, we believe if some of these were to be passed and implemented, it could affect the development of the industry, said Alicia Yap, Managing Director and Head of Pan-Asia Internet Research at Citigroup. Ms. Yap said that the rules could limit targeted ads and product recommendations used by almost all e-commerce platforms, while rules on forced exclusivity could hit Meituan, which has in the past required restaurants not to list on competing platforms. But traders in Shanghai were skeptical the new rules were so dire for China's most successful companies. This is what I will leave you with, guys. This is just the way of Beijing saying to all the big companies, you have to play ball by our rules. Even if you are a giant like Ant Group, you all need to fall in line with directions from the authorities, said a trader at one Chinese brokerage. Again, this is a political game now, with the Chinese Communist Party clamping down on these huge companies that are growing exponentially stronger with their sales and revenues growing exponentially stronger. And they're saying, you know what, you cannot do whatever you want. You need to abide by the rules. And I believe personally it is a very good thing. And there's one more thing that I want to bring to your attention, which is the bill S.945, Holding Foreign Companies Accountable Act. It has passed the Senate. It has yet to pass the House, and the President has to sign off on it. And if that becomes the case and it becomes law, basically what this law states is that this bill requires certain issuers of securities to establish that they are not owned or controlled by a foreign government. So they want to make sure that none of these companies, such as Alibaba or JD.com or any of these other fintech companies, are owned or governed by the communist Chinese country or any other country in the world. So if this bill passes, then it could really put a hamper. It's a big catalyst, a negative catalyst in the US for these Chinese companies and their stocks, because then they will remove these stocks from the US exchanges and you will no longer be able to buy these stocks on US stock exchanges. So this is something to look out for, and I'm hoping that as soon as our political problems with the next president get settled down and we figure out who's the next president, hopefully this can actually play out and we can have a better guidance as to what's going to happen with this act and this bill that has passed the Senate. So guys, I'll leave you with that information. I'm not a financial advisor. I'm not going to tell you what to do. I'm just sharing my information, and hopefully you'll be better equipped to make a wiser choice so that you'll do the best thing for yourself. If you like this video, please give me a thumbs up. I appreciate all of you guys, and I'll see you guys in the next video. Thanks for watching.